Time for hot picks, and we are looking at media and entertainment. Our guest has Live Nation as his top selection. He says the company is well positioned to benefit from strong demand and that antitrust fears are already more than priced into the stock. We're joined by Jason Bazinet, Managing Director, Media and Entertainment Research at Citi. Jason, great to see you, and thanks very much indeed.
Yeah, happy to be here.
It is incredible. We hear stories of people willing to pay massive prices for live shows, and that's boosting Live Nation.
Yeah, I mean, we've been on I'd say a 2-decade journey now where consumers are increasingly wanting to go out and see their favorite artists in person. And so the concert business has been growing, very comfortably in the double-digit pace now for quite some time. And we don't see any evidence that that's going to end. The thing that's exciting about Live Nation is they're about in the third year of, I'd call it backward integrating into more venue ownership, which carries much higher margins. And so this company used to spend $200 million a year on CapEx. For the last couple of years, it's been over $1 billion. And that's a very good thing because their returns on invested capital are at record levels. And we just want them to keep spending money. When they spend the money and they own the venue, they just get much higher margins because they get site lease fees. They control the food and beverage at the venue. They get sponsorship revenues. And so it's a very favorable mix shift.
And just tell us, so they've been on a real estate buying spree?
Yeah, they've been acquiring venues outright. They've been building some from scratch. They've been deploying capital to renovate older venues and give them a refresh. One of the big assets they just bought was a sports complex in Paris, and they're retrofitting it so it can handle concerts. And so it's a very exciting time for Live Nation.
And apparently you talked about hospitality, which would include beverage sales. Apparently, I hope I'm not out of date. I'm looking at a 2024 story. Apparently, you could buy a can of liquid death water, the exclusive water vendor at hundreds of Live Nation venues for $7 US. And Live Nation has had an ownership stake in that water brand for quite a few years. So they make money in all kinds of ways.
That's absolutely true. I mean, at their amphitheaters, the average fan is probably spending, $45 to $50 on merchandise, food, and beverage. So there's just an insatiable appetite on the part of consumers. Live Nation used to call themselves, an accidental retailer, where you'd get a warm beer and a cold slice of pizza, and they've been, radically upgrading sort of their offerings to appeal to consumers that are willing to spend more money to get something that's better. And to your point about liquid death, I mean, there's clearly a push for consumers to be a bit more healthy than they were in the past. And so they don't just sell alcoholic drinks, but they also sell water.
Tell us about AppLovin. To my understanding, this company makes it easier to create your own video game.
Yeah, it's not so much create your own video game. Their customers, their core customers, about 90% of revenues are the video game, mobile game customers themselves that are looking for installs. And so they can go choose to spend their user acquisition money on their own, or they can choose to do it through AppLovin. And AppLovin has some AI tools that can put the right ad in front of the right person.
Oh, I see.
To make the user acquisition spend more effective for the mobile game publisher. In very short order, AppLovin has gone from an AI winner to an AI loser, which is why the stock is down. But this company, continues to put up, 70+% growth. They've done that for the last 4 years. Where the stock is trading right now, even with that very healthy top line growth, it's trading at a high teens multiple of next year's free cash with no debt. I mean, it's just absolutely on sale.
Right. And that's interesting. So the app developers are the ones it's aimed at, not so much the consumers.
That's exactly right. So the way it works is the mobile game publisher sends AppLovin, says, I want to spend some money, and AppLovin and goes out and buys mobile game inventory on behalf of the publisher. And then AppLovin gets paid if the consumer actually downloads the game.
And then your, your final idea here, also video games, Take-Two Interactive.
Yeah, I mean, we've got Grand Theft Auto 6 coming out in November. That sort of consensus, I wouldn't say we're variant there. The really interesting thing that I'm focused on is on the balance sheet. They have a line item they call capitalized software development costs, which is essentially cash that they've spent developing games that have not yet been released. That number used to be a few $100 million. It sits at $2.2 billion. And my hunch is that there's a game that where the company has spent the cash but not yet released it and therefore not amortized it.
Oh.
That is Grand Theft Auto, but I think it's something else. And I think that something else might be a Red Dead reboot, which came out almost a decade ago. And so what I'm excited about for the stock is not just the Grand Theft Auto release in November, but potentially a Red Dead release maybe the year after.
What is Red Dead? What sort of a game is that?
Oh, it's like an open world Western. That's the way to think about it. So, you'd ride a horse and you have a gun and you walk around. And it's considered by video game aficionados as, maybe the most realistic open world game that's out there, even more so than Grand Theft Auto.
Oh, my goodness. And I guess we're just in the Stone Age. Games are going to get more and more immersive, aren't they?
Yeah, I think they are. I mean, that's what's very interesting. The market right now is just looking at all of these AI tools and viewing it as just a negative across the board. The market's painting with sort of a broad brush. I would argue that a lot of these tools are going to be used to lower the cost of development for a lot of these publishers. Mm-hmm. I mean, going back to App 11, if you let's say you take the maximalist, AI view, which says AI can just create games, at low cost, everywhere for everyone. What's really going to happen is user acquisition prowess is going to be at a premium, right? This is why the mobile game companies spend so much. They spend 30% of their revenue acquiring users. Why? Because it's so easy to make a mobile game. So if you believe in AI and you think it's going to be really easy to make a game, that should redound to the benefit of a company like App 11 that specializes in user acquisition.
Because the cost as games become more complex, the cost of creating them has soared.
Yeah, that's right. So AI will make it, I think you'll have more games, cheaper games. There'll be a proliferation of games out there. And then having user acquisition, acumen, which is what App 11 does, should be at a premium. Because at the end of the day, you need to get an install, right? It's not enough just to have some fancy graphics on a screen, which is what Jim and I and others, are rolling out. It's like, how are you actually going to get users? And that's hard, and it takes a long time.
It's interesting. We're almost out of time, but apparently older adults, especially baby boomers, they're all over video games. It's not just a teenage boy thing.
Oh, that's 100% right. I mean, your typical consumer on the mobile gaming side is an older female. On the AAA games, you're right. It's about half male, half female, and it spans all age groups. I can't say on the AAA games, like Grand Theft Auto or Red Dead, that we're seeing a lot of volume growth. Okay. Where they're getting most of their growth is getting consumers to spend more inside the game once they purchase it.
Right. I think I'll avoid it though. I'm in the dream. I'm in the dream world enough as it is. Jason, thank you very much indeed. Jason Bazinet, Managing Director of Media and Entertainment Research at Citi.